What's up, everybody? Goldman Sachs just came out with their home price predictions through 2026. So today, we'll take a look and see what they're saying. They may surprise you. And then stay tuned until the end because we'll take a look at Redfin's latest housing market update. So let's dive right in. In Lance Lambert's latest article in Fortune titled 4 Years of Housing Market Gridlock, Goldman Sachs issues U.S. home price predictions through 2026. He talks about how the housing market underwent a significant shift in the summer of 2020 despite the unemployment rate remaining in double digits. As we know, we experienced a housing market boom, or we like to call it the pandemic housing boom, due to the trend of working remotely and wanting more space for obvious reasons that caused people to want to buy new homes. The surge in housing demand during the pandemic was so substantial that the Federal Reserve researchers estimated that housing supply would have needed to increase by a staggering 300% in order to match the elevated housing demand. Add that to the historically low interest rates at the time, and housing supply could not keep up with this incredible demand, leading to U.S. home prices overheating. Lambert writes that from March 2020 through June 2022, the Case-Shiller National Home Price Index recorded a staggering increase of 43.3% in U.S. home prices. And that according to researchers at the Federal Reserve Bank of San Francisco, more than 60% of these gains can be attributed to the heightened demand triggered by these work-from-home policies. Fast forward to today in 2023, and the rise in mortgage rates has clearly stopped the overheating of home prices. Or has it? So let's take a look at Goldman Sachs' latest economic forecast and we'll see what they're saying. Goldman Sachs' forecast predicts a very slight increase in U.S. home prices as measured by Case-Shiller, 1.3% in 2023, followed by 1.7% in 2024, 2.4% in 2025, and 3.8% in 2026. To put this in perspective, the average annual growth rate of U.S. home prices since 1976 has been 5.5%, including an unprecedented surge of 19% in 2021. Now remember, these are all national predictions and real estate is very localized. In fact, where I am in the DC area, it's literally house by house. One house will sell with multiple offers and go way over asking, while another house will sit and have price reductions until it'll attract a buyer. It's just a very weird market, folks. If Goldman Sachs' forecast comes true, this would mean that U.S. home prices end 2026 4.5% above the pandemic peak in June of 2022 and up just 10.1% from the bottom in January of 2023. But after a 45% rise in home prices during the pandemic peak, to be above that, I still think that's pretty incredible, especially after so many people were predicting a housing market crash. In 2009, I saw a 20% decrease in my home's value that took years to recover. This correction seems pretty mild to me. Goldman Sachs also anticipates minimal relief for mortgage rates, projecting that the 10-year Treasury yields will average 3.75% between 2024 and 2026. If this scenario unfolds, mortgage rates will likely stay around 6%. With mortgage rates now approximately 75 basis points higher than in the spring, we expect some affordability-related pressures will drive weaker home price growth in the coming months, wrote Goldman Sachs researchers in their latest housing note. Lambert also writes that heading forward, Goldman Sachs' model predicts that inflation won't break out again, with the consumer price index rising 3% in 2023, up 2.8% in 2024, up 2.4% in 2025, and 2.4% in 2026. While Goldman Sachs expects the job market to remain tight, with unemployment rate staying below 4% through 2026. So I guess we're just gonna have to see if Goldman Sachs is right. They seem pretty conservative to me. According to Redfin's latest housing market update, the median sales price is up 2.1% from a year earlier. That's the second straight year-over-year increase after 4 months of declines. Sales prices increased most in Milwaukee, up 12.2% year over year, Miami 9.7%, Cincinnati up 9.5%, Newark, New Jersey up 7.3%, and Anaheim, California up 6.9%. Home sale prices declined in 20 metros, with the biggest drops in Austin, Texas, down 9.2% year over year, Detroit down 5.5%, Las Vegas down 5.5%, Phoenix down 5.1%, and Fort Worth, Texas down 5.1%. This is such a mixed market. Pending home sales were down 14.8% year over year, continuing a year-plus streak of double-digit declines. This is the golden handcuffs effect. Sellers don't want to give up their low mortgage rates to then go buy something with a much higher rate. New listings of homes for sale fell 25.1% year over year, and active listings dropped 16.1% from a year earlier, the biggest drop since February of 2022. Homes that sold were on the market for a median of 27 days, the shortest span in 10 months. That is up from 22 days a year earlier. 36.6% of homes sold above their final list price, down from 47% a year earlier. But still, 36.6%, that's a lot of homes that are selling above the list price. And on average, 5.7% of the homes for sale each week did have a price drop, on par with 5.8% from a year earlier. And the months of supply, which is a measure of the balance between supply and demand, was 2.8 months, the highest level since April. So in some parts of the country, things are still slowing down, while in other parts, they're really heating up. So what do you guys think? What's happening where you live? Definitely comment below and just tell us what you see. Just the best way we can really understand what's happening in the housing market across our country. If you believe Pantheon macroeconomics, we are still heading for more pain. If you didn't see last week's video on that, check that one out next. I hope you got some value out of today's video. Today marks 3 years since I started making videos on YouTube about the housing market and also about my local markets here in Maryland, DC, and Northern Virginia. So if you have enjoyed my videos and you want to show the channel some support, definitely smash that like button, comment below, give me a little attaboy, and subscribe to our channel. It just motivates us to make more videos. Regardless, I appreciate you watching. So thank you and bye!